Welcome to Three Amigos. It's the first day of October. We got some new levels in the three indices you're probably watching. We got new limits in equities. We got new products coming out, some volatility products. We'll get to all of that shortly. We'll start with a quick rundown of the news. I see in Dan's outline, dumpster fire debate. No arguments here. That was, as Dana Bash put it, a shit show.
Where's the dumpster fire come from? I've never heard dumpster fire.
Dumpster fire inside of a train wreck.
Okay.
What was the following? Someone came out and said it after the debate the other day, and it just made me laugh.
Yeah, that was Jake Tapper. That whole minute was incredible. And I think the origin of a dumpster fire, it's just there's nothing salvageable about it. It's hot garbage that is being incinerated. It's just, you can't take one good thing out of a dumpster fire. All right.
Well, I couldn't take anything. The best thing I took out of that whole thing is I went to bed early and didn't finish it. So I shut it off.
Yeah, I shut it off and I just went about my night.
Uh-huh.
Yeah, well, the good thing is you got two more of those if you really hate yourself. So,
Biden came right back and said, "Let's do it again." I'm like, okay.
It is just like round 99 of like an old timey bare knuckle match. People just slopping stuff at each other.
I recently saw something that came out. It was like 120 years ago. Late 1800s was the longest boxing match of all time. It was 112 rounds. These two guys went at it, and the fight ended because they couldn't stand up off their seat after the 112th round. When they were going back in for 113, they had to call it because neither guy could stand up.
What a couple of wusses.
I know. I mean, what's another round at that point?
Right.
Yeah. Anyway, that obviously is not something that moved markets much, but as long as we're talking government, stimulus talk is back. We saw disposable income decrease. We got layoffs coming. Disney laid off 28,000. We got the airlines making some clerical adjustments from furlough to you ain't coming back. That's happening in October.
The furloughs are coming.
The furloughs are coming. Yeah, Paul Revere of the Bureau of Labor Economics.
Mm-hmm.
Anyway, I think that is something. Any rumors about that? We saw markets, the equities take off the other day on the rumor of that. So that's something to keep your eye on. Stimulus is kind of what drives everything at this point. That's kind of the economy we live in.
Mm-hmm.
Dan, you got anything more to offer on that?
No, I mean, you're spot on. Stimulus is what people are talking about. It's what they want. That's every little motion that we're seeing in the markets right now, whether up and down. It's okay. It went up because Mnuchin and came out and said, all right, we're having talks again. It goes down when they come out and say, we did not have a good conversation.
Well, now that we all know that like stimulus equals markets go up and to the right if it gets approved, is it going to happen again? Like, I think it would, because they're like, oh, a bunch more money's coming in. Let's start heading the train back up the hill. And my question is, if it passes, what's going to make this thing roll over again? You know, it's got to like, the more money comes in, where does that money go? I mean,
well, if the Democrats were to say that the Democrats don't flip the Senate, there's a tendency among Republican Congress to suddenly care a lot more about deficits once there's a Democratic president. So if that's an option that happens, I think that we'll kind of see the end of that. That's certainly what's happened in the past, but who knows? As we talked about last week, I still think that the market's going to be somewhat of a holding pattern, but now kind of the only game in town that could disrupt that holding pattern, I think, is the stimulus. So something to keep an eye on. I
think we have to think about, too, this stimulus. It's so different this year than any other year, election, non-election, whatever the case may be. This stimulus is, if this goes through, we may see these jobs at Disney laying off 28,000. We may see some adjustments there. So you're going to have people getting back to work, hopefully, fingers crossed for all of them, that they can get back to work, and then they can start putting more money back into this economy, be it 401k investments and things of that nature.
Stimulus coming, furloughs are coming, elections are coming. October's 1 month before elections. I can definitely see why the CME goes, hey, we're going to tell you guys where we're pumping the brakes and we're going to light it up because things are going to get pretty crazy. It hasn't yet, but today is October 1. So today's been slightly quiet, though very volatile on the NASDAQ. Yeah, I mean, this should be, October typically is, without all this nonsense and everything going on, typically is a great trading month. This should be set up for an epic one, but when you expect the epic ones, it ends up being a dead one. So I've learned that in the history of trading.
Right. Traditionally, October is big because, people start to wind down towards the end of the year. Granted, this year is kind of different because it's an election year. And if you haven't noticed, there's some other stuff going on.
Yep.
I think you make a good transition, though. Before we get to actual levels, we wanted to discuss a couple of new offerings, some hot new CME swag. I guess it's not swag. It's a product, and it's a level. The CME is changing their circuit breaker levels.
Yes.
Is that on all the equity products, Dan?
Yeah, so it'll be all equity products, and it's just overnight. So the regular day session, nothing there is changing. So nothing changing in the day session. Overnight, this is where the changes are coming. Currently, what we have is we have a 5% breaker lockout, up or down, and it's a lockout. So it shuts the market down until we open up at 8:30. Pre-market can come in. You can start seeing that market move in the pre-market. Opens up at 8:30.
Is it good to trade around? Is it good to trade around those, Danny?
Probably not. I recommend staying away if we get anywhere near those breakers.
You do not want to get locked into a position that is, yeah.
Absolutely. So Oh, go ahead, Jack.
Yeah, and if you are going to get locked in on it, it better be in the same direction it's going.
Yes.
Yes.
Yes. 100%.
Well, which is interesting too, because a lot of people think, oh, if we go lock limit down, if I'm short, it's just going to get pushed lower. And we can sit here and we can tell you for 100% fact that's not the case. Look back a few months ago. We went lock limit down a few times. The first time it went lower. The next time it went higher when we opened up. So it doesn't matter what your position is. So
and it rips.
It rips. And it usually hits a next circuit breaker really fast.
But I guess too, if you're locked, if you're on the right side of the trade, if you're not really locked, you can always buy back.
Not in the overnight session.
You can't hit, like, if you're short, you can't buy into the
market shuts down until 8:30. Well, it doesn't matter at this point because it's over. That's not going to be the case anymore. We're moving from a 5% lock limit to 7%. We're changing to 7%.
Yes.
And it's only going to shut.
But if it locks limit down, but Jack's question, if it's lock limit, it's falling out of bed, you get short, and it goes lock limit down. Just don't even be in that position. Get out of your shorts well before that. You should definitely know where lock limit is. But I don't ever trade around it. But is that true that you can then lift your cover your shorts?
I don't believe.
Don't trade around it, but
yeah, just don't trade around it.
So we go from 5% to 7%. Now, if we hit 7% up or down in the overnight session, we're going to go into a 10-minute lock. From there, it's going to open back up, and we have a 3.5% dynamic limit. This is where things get confusing. We broke. This is where the world gets
turned upside down.
We broke it down a little bit the other day in Coach's Playbook. That dynamic limit, it's a rolling 60-minute limit. So if in any 60-minute period in the overnight session until the market opens up at 8:30, if it moves 3.5%, we're going to lock for 2 minutes and we open back up.
Well, I'm proud of us three amigos not knowing that, because that means we don't trade it and we're disciplined enough not to trade around the lock limits.
I'm never awake.
Don't do it.
I know, right? I know.
Don't do it. Those of you with Top Step Trader, just keep in mind, we will get an email out to you guys with specifics around all this and anything program changes and whatnot that'll come along with it. I just thought this was a great time to kind of mention it. And I brought it up to my old man last night. I was down at his house and I said to him, I go, so did you see CME's new overnight limits in the equities? And he goes, man, they're just having fun raking in the cash, aren't they?
Every time.
So looks like Michael froze on us here. Oh, there he is. He's back.
Perfect.
You guys froze on me. We went lock limit, I guess.
Well, yeah, and beyond the changes in limits, we got a new product too, right, Dan?
We got a new product. So it's the NASDAQ Volatility Index. We've all heard about the VIX. I think it's CBOE has a VIX. It's a level a lot of people, or a product a lot of people watch because it really tells us what's going on in the world. Jack, you brought it up last week, I believe, talking about how we were at the highest level of VIX as we were making all-time highs, something of that nature, right, Jack?
Oh yeah, back when we were making the current all-time highs,
Yeah.
like 3,600 or thereabouts, the VIX was still incredibly high. It was like the highest. It was an outlier. If you plotted like previous all-time highs versus how high the VIX was, it was just a point unto himself. Because usually, if things are at all-time highs, the idea is that they would get there because everyone's like, it's good. This
Yeah.
stuff's good. We're all feeling good. But no, and
Mm-hmm.
lo and behold,
Yep.
it didn't last.
So CME is bringing it in. It's going to be an interesting product. It's going to be $50 a tick. So it's expensive, and it's going to have really big margins to start out. So obviously, it's going to be something worthwhile to keep an eye on. I'm just going to say, from my understanding of it as we stand right now, it's not going to be really an affordable product to trade right away. But we may see it.
Yeah, it's set up for the big players, right? $50 a tick. Come on. I mean, I get it. And it's great that they're having a product. I'd like to see how it does play out. I do like it.
Right.
Well, I think some of it too is when you start playing those volatility things. I mean, how many funds every fund that got blown out in this COVID move? It was because they were short volatility, and just by the nature of, at least in the options, how you have to keep piling in more and more positions as it starts exploding more and more. That's kind of why I think Mick said that this volatility product is going to have the similar margins as far as a percentage to like Bitcoin.
Yep.
When it came out. I mean, did he mention like $90,000 a contract?
Yeah, $90,000 a contract. So it's going to be expensive. I think as you see participation, if they start to see a lot of people wanting to get involved, maybe that'll come down. But it'll be interesting. So I'm kind of excited, at least just to watch it. Really, to watch it. I think it's nice that the CME is going to have their own product that we can kind of keep an eye on. That's going to tell us what's going on volatility wise.
Nice. Quick question before we get to the levels. Do you happen to know what the nominal value of the contract is? Sorry to put you in a spot. I was just interested.
You're putting me on the spot here, Jack, and I really don't. No, I'm kidding. I'd have to do some digging.
We'll look into it. I was just
nominal
curious.
Value $27,000.
Okay, so then maybe it was like a $9,000 for margin. That'd be wild.
That's what I'm wondering. Yeah, so I'm seeing right here, current contract, notional value 27,000.
Cool. Yeah, so those are some cool things to be looking at going forward if that's your pick. But let's get into some levels. You want to start out with the S&Ps?
I mean, there's one level. I've said it for the last month. I'm going to say it again. I've actually got a couple messages lately from some of our traders asking or saying thanks for keeping annoying us with this level, 3380 in the S&P 500. If you're not finding opportunity going to or away from that price right now, I don't know what you're looking at.
Yep, I think it's been a great call. 3380s have been, the market has been hovering in and around and all over it.
Yep, it's just been opportunistic, whether you're long or short at it or looking at it as a profit target to get out of a trade. That's what you can look here. I think it's just become really a strong magnet. And that's, to be honest with you, last week at the S&Ps, I said, look, I'm not really looking above 3380 and I'm not looking below 3280. And I'm going to carry that over here this week. That's going to be what I'm going to continue to watch for a while, at least.
What makes that a pivotal level?
Time. So for me, it's time and volume, participation at that price. If we were to start really digging into everything, I think levels define themselves. We can sit here and throw all sorts of things at them. It goes back to the first lesson I had on settlement price was, why is settlement price so important? And I was told, because it is. That was what I was told.
Well, this is a little bit of bro science I'm about to throw down, but during the COVID, after the crash and everything like that, in my mind, the previous high was 3380. I just took that shortcut. It wasn't exactly that, but I think that might have something to do with it.
Okay. So
I'm looking.
It was a little bit more than that, but it wasn't much more. That was like close to it.
All right. Thanks for pointing that out, Jack. So that would be my S&Ps right now. That's what I like about them. Pivotal, opportunistic, 3380. Continue to watch it. Look for opportunities at that price.
Yeah, and I like you have in the notes that the 15% correction from the highs would be like 30.89.
Yeah.
All good things to look at. But once again, things seem to be stationary minus stimulus. Although if they suddenly, it seems like the stimulus is getting delayed, yeah, I could see it getting down there.
It could. And on the flip side, if we do get something
Uh-huh.
passed through here, we could see it take off. I still think we're all kind of on the same page as staying kind of range bound until the election. But if new information hits the marketplace, it's definitely going to be interesting.
Yeah, well, we got a new as we move on to the Nasdaq. We're back to kind of how it was a few months ago. Today, we got the Nasdaq, as I'm looking at it right now, up 1.75%, while the S&P is basically flat and the Dow is down a smidge. Are we seeing a return to sort of the primacy of the big boy tech boys? Big boy tech boys.
Tech's the one that's not talking about layoffs, not talking about furloughs or anything of that nature yet. Makes sense.
Yeah, that's
dude, that's a really good point. Tech is not talking about layoffs. Tech is not affected by COVID. Tech is thrived during COVID. Tech is still where it's at, and it's showing that. I mean, it's up well more than everybody else. The other two sisters are today.
Yeah, absolutely. And tech, think about it. Tesla is still doing well. Still, if we were to do the math, I think we're still over $2,000 a share before the split. So that's huge. You've got, I know there's been, I think what's really interesting is just in general looking at the electric vehicle sector. Nikola, I know they've had some upsetting news come out, but GM is still working to try and make a deal there. So that's big for some of these electric vehicles, and a lot of them are falling under the tech sector.
Can I talk about a trade I've been doing?
Yeah.
Yes, I would love to know.
That's what we're here for.
All right. So I've been doing this thing in my Roth IRA, right, where you don't pay the taxes on anything, right? Because there's so much volatility in Tesla.
Oh, hold on. What is that? Is that the Trump strategy on that one?
I don't think this is going to be Trump's strategy. once I throw out what it is I'm doing.
No taxes.
I was
Okay,
waiting for something there.
I get what
I'm
you're
done.
saying. Yeah,
Mic drop.
Mike's gone. So what I've been doing, and it's a risk averse strategy, but I keep on doing is buying 100 shares of Tesla and then selling a call at a strike price that's maybe 30-40% off the current price. And what you end up doing is like every 2 months, I'm essentially locking in like 6% on it. But here's what's been happening is every time I do it, that's when Tesla takes off to another thing. And it's just, I have to look at it for the next 2 months being like, you're up, 100% on the underlying stock and you're down, 98%. I'm picking up pennies, man. Anyway, I just had to get that out there so someone else can cry with me. Dan, you got any levels for the NASDAQ?
Absolutely. So NASDAQ, first off, what's pretty cool.
You got to show them the, yeah.
What's that, Michael?
No, I got a delay over here.
Oh, okay. So NASDAQ right now, I got a couple things to keep an eye on the NASDAQ. Low side, 11,200. High side, 11,500. If we get above 500, we're going to be in a pattern, I believe, from 500 to 600. If we can break out above 600, and I think it's going to take a stimulus package going through to break out above 600. But if we do, huge opportunity to go shoot to the highs again at 12,472. So I think 500 to 600 could be a really tight pattern. If we can get above 600, there's room all the way up there. But I think it's going to take a lot to get up there.
Yeah, I think that's right. And, still makes me worry about the economy. You talk about like the Disney layoffs. I don't think a lot of, goofies are getting hired by Google, right? So there's a little bit of an issue here, right?
There's no transferable skills there.
Yeah. Well, I guess what I'm saying is that it's great. Eventually we kind of got to deal with sort of how. I think we can all agree this rebound has not been evenly divided. It's.
I think we can agree with that.
Speaking of which, let's head over to the Dow, which is not certainly shared in that.
So the Dow, like Jack, you just said, down here a little bit today, but has been positive over 4 of the last 5 days. So we are seeing a little bit of life over there. Dow's still the one struggling to hit the all-time high, which, again, 29,546. So it's way up there. This week, I'm going to look between 27,300, high side of 28,000. That's kind of this little range. Again, I say little, it's pretty big range, 700 points, but last week was a 1,500 point range. So I'm looking between that 700 points there to look for some opportunities.
Absolutely. I think those are great levels. And we kind of go to our overall things before we sign off for today. I'm looking on this rebound right now is a little declining volume there. Things are, there's not, I'm looking for that confirmation of the higher volumes on something like this. So stimulus. That's what I'm going to be looking for in the next week.
I'm on the boat right now with Michael. I am looking more for shorts than longs. Short time frame, bearish for me, kind of right now. I've got to, and again, I want to touch on, because I think this is a question we had last week from Nick. Nick Moe asked us, and I want to make sure we answer his question. About being biased. How do you trade or find opportunities against your bias? For me, it's waiting for the market to give me something. Like I need that 3380 level that I believe in right now a lot, and being able to short there. That's how I look at it. Like I have to have something I really can find faith and believe in, and I can trust.
Yeah. No, I'm there with you. Go ahead, Jack.
Yeah, strangely, I feel better when I'm in a position that's against my bias. It makes it harder to hold on to let the winners run. But at the same time, I feel confident that I'm not just succumbing to my own sort of preconceived notions of what the market's doing.
Yeah, I always have I always try to have a flexible bias, but like I said, I've always been not always been, but lately in the last 6 months, I've been a perma bear. Actually got short here while I was talking to you guys. It's running in my face right now because I did not put a stop in. But this week has been a choppy week.
Disclaimer: trade with stops. Don't trade like Michael.
I typically always have an auto OCL in here. Didn't have it highlighted. I'm sitting here talking to you guys, and it's I get $400 in my face right now. But I still like it to the short side. But yesterday I did very, very well on getting long off the pop at the end of the day. It sold off at the end of the day, but then it popped up. So right now this week has been choppy. You had the end of the month, roughly the beginning of this week. You had today's the beginning of the month, and which is the end of the quarter, beginning of the quarter. So this has been a choppy week. I'm up a little on this week. Probably not now anymore with the short that I got going on right now. But yeah, I mean, I always try to have a flexible bias in what I'm doing. I look at order flow and how it's setting up and how the market reacts to certain levels. This right here was a gunslinger shot, and it was me being stubborn to a bias and not being a flexible bias, because I didn't want to be on this conversation with you guys and have the market be falling out of bed and not be a part of it. So clearly not falling out of bed right now.
Well, you didn't miss that, so. Yeah. So, well, hope that turns around for you. And yeah, I think that's probably where we'll leave it for this week. And we'll be back next week with a new episode. Hopefully we'll have some more clarity as far as the stimulus, and we can start thinking about what's coming next. Mike and Dan, thanks as usual for being here.
Absolutely. And one last thing, anyone that is watching this, drop questions in the comments below. We're going to try and get to them the following week. So if there's anything comes up, let us know, and we'll do our best to answer them.
Right on. I don't think we have a sign off for this show, so I'm going to go walk the pug, and I will.
Adios.
Adios.
Adios.